On Sunday, the Green Party announced it wants to introduce a wealth tax. The media lapped it up. So for some balance, here's the wealth tax in 60 seconds. At their cores, wealth taxes are envy taxes. They unfairly penalise the products of decisions made before a tax was introduced and punish people for success. A retiree under this scheme might lose a third of his or her assets during retirement. The result is that you end up with fewer successful people to pay taxes and employ others. There's another practical problem. Wealth taxes don't bring in a lot of money. Taxpayers shuffle their assets to avoid them or take their money offshore altogether. And complex requirements to annually value assets are a dream for tax accountants, who can charge big money to obtain favourable valuations and minimise liabilities. It's also a death tax. The Green Party would allow a married couple to split their wealth to avoid individually crossing the threshold for the tax. But if your spouse dies and you gain the other share, you may suddenly become eligible for the tax, in your moment of grief. Wealth taxes are favoured by those who think the solution to poverty is dividing the pie rather than growing it. The wise approach is to instead increase wealth by cutting taxes and making it easier to be productive and create jobs. In the time it takes for me to say this sentence, the government has spent $25,068 taxpayer dollars. We are the group holding them to account for every cent. Join the Taxpayers Union at taxpayers.org.nz.